Good morning, everybody. Welcome to another Daily Market brought to you by Mike Bjork. Today is Thursday, January 30th. Hope your morning is going well so far today. Let's take a look here. We do got a couple items here on the economic calendar. We got the weekly jobless claims we get every Thursday. Now, we had last week's number was revised higher by 12,000. So it was initially at 211,000. It was revised higher to 223,000. That was an important one because it's going to be used as the sample week, which is that data is used towards the calculation of the jobs numbers that we'll see next Friday from the Bureau of Labor Statistics. Now, there's other components to it, but with that higher revision, that might mean that we could see a weaker jobs number coming in February. So just be prepared for that. These are still pretty decent numbers, even though we're at 220. Some of that means that employers are trying to hold on to their employees, even though they're holding back on other avenues, probably taking less profits. Forecast for this week was for 218,000, and it came in at 216,000, so a little better than expectations. And then the other item here on the calendar is the Q4 GDP. Now, the final revision of the Q3 was at 2.1%. Forecast for our initial one was 1.8, and it came in higher. Basically, carried 2.1 as what we saw in the third quarter. So we'll have two more revisions. So we'll get February's numbers, and then the final revision come out in March, and then we'll start with the next one. So right now it looks okay so far. The economy's doing pretty strong, as the Fed yesterday mentioned. Fed announced that pretty much nothing out of the ordinary. The Fed was going to uh, the Fed said the economy is strong. They're still kind of watching this coronavirus aspect of things, see how it's going to play out with the global economy, how much of a slowdown it could impact the markets. Um, so those are bits of concerns. So as a result, the stock market is down. As we mentioned, the coronavirus, something that people are watching. And because the World Health Organization is going to go ahead and meet today, scheduled a point to meet and discuss possibly a world alert type of thing, that kind of spooked the markets. So we've had some decent earnings reports come out, but because of this concern, the stock market is down, in negative territory today. Here's the bond market. This is benefiting us. So what happens is that most of the time when this happens, not all the time, but what happens is that when the stock market is down, money needs to go to a safe haven. You're taking out of a more risky asset like stocks and moving into a safe haven, which is mortgage-backed securities or bonds. Uh, and that's what we're getting right now. And we're up about 8 basis points currently. Not quite enough, pretty close, but not quite there to get better pricing. So we're still kind of this sideways pattern here. Usually we want to try about 12 every 12 basis points. We might see a price improvement or worsening depending on which direction it's moving. But right now it's up about 8 basis points. Coming close to this ceiling here again. We're coming close to the area where we've been where last September, October timeframes were. That's kind of where our pricing is at right now. We're in pretty good levels right now. And here's the yields here. We're dropped down. We're down to about 1.55 right now. We got a little bit more room down to pretty close to 1.51 almost, just to round upwards at this level here. So we still got a little bit more room to put that bonds could grow and help improve rates a little bit further. All right, so that's pretty much the wrap. Rates are unchanged so far. It's still trying to work its way up, but not quite enough to get us a price improvement for this week. If you guys are in California looking to buy or refinance, I'd love to be able to speak with you guys. Please reach out to me. You can direct message me or email me. My information's in the red here. Direct message, of course, depending on where you're seeing this at. If you're seeing on YouTube or uh, blog posts or somewhere, just feel free to direct message me from those accounts, and I do respond. Email is probably the best. I do respond a little quicker as I get those more quickly than I would the direct message. But you guys have a great rest of your day. Thanks so much for watching, and we'll see you tomorrow's report. Bye bye.